Hey everyone, it's nice to be able to put out another video. Been pretty busy lately. I started a new job, so definitely have less time for these. So this one's going to be a bit of a long one. Hopefully keep it around 20 minutes or so. Basically, I want to talk about a few things. I got the monthly report. I want to talk about the C618 news release that came out. I want to talk about the insurance platform, what we might be looking for revenues there for Q2, which just wrapped up. We're going to be in Q3 now, so we've got that's the start of the clean tech revenues coming into the business. I'm also going to talk a little bit about inflation numbers and core and PMI and what that means going forward and how they might affect us. So basically looking here, starting with the monthly progress report. So right now we've got a number of outstanding listed securities, just under 100 million still. They mentioned again that the 618 event was successful this year, and we're going to be seeing the numbers come out for that soon, which we actually have now. And business was on an uptick overall for JD.com, but a little bit slower than the gain last year. They also said a mention on their news release that they put out about doing their partnership with the HRCB to create a program for better access to credit for Chinese restaurants. They mentioned here as well the signing of the National Street Cooperation with the SEPC, right, which is super exciting for the clean energy, right? These guys are going to be providing all the funds and managing operations of the installations, but they're just using Tenet's platform, right? So, we don't really know what we're going to see for revenues with that, but typically, software revenues can be, or software margins can be quite high. So while the amount of money that they're making is unknown, but the margins is going to be good with it regardless, I think. So also they talked about here the development and marketing and business side of Canada started to make strides. They hired more people, so we're going to see some costs expand there. Like they're right now they're around 5 million in burn every quarter in North America, getting the hub up and running, right? So they have hired more people, so we might see the burn rate go up a little bit in Q2 when we see those numbers. They mentioned here that during the reporting period they issued a loan of 130,000 to members of board of directors. So basically they have to repair this by the end of the year. As far as the loan amount compared to how much cash they have on hand, it's a drop in the pan, and it doesn't overly concern me myself. If these numbers start getting a lot higher or cash starts becoming an issue, I might take objection to it, but as of right now it doesn't bother me. So let's have a look at the news release that they put out for 618. So while this year's event saw a slower growth rate than previous years, overall sales number from the year's festival, participants still exceeded their total sales for the 2021 event. So according to the firm, 134 billion worth of goods was sold during this year's 618. The main things were electronics, household appliances, which they mentioned in Singles Day last year being a pretty good generator for them. Skincare products, sports and outdoor equipment and apparel, personal hygiene products, and makeup and fragrances, rounding out the top 5 sales categories. So those 5 categories accounted for about 34 billion, right? So you're looking at about 25%. Yeah, 25% of total sales during the event. So they said once again work primarily with JD.com retailers and suppliers in preparation, ensure the short-term financing needs to be met to get the maximum out of this year's festival. So the services were used in connection with transactions exceeding 500 million RMB, generating approximately 10.1 million revenue for the company in the event. So something I want to talk about really quick is we got kind of more of an exact number last year. Last year they said that they financed 789 transactions worth combined 105 billion RMB. So this rounding, I believe, is what they did for total transaction volume, plus they didn't say how many transactions. It could possibly be just Tenet the same thing. Like they're not they're not always allowed to be full disclosure with some of these partnerships that they're making, especially in the margins and how much they're charging clients and stuff. Like there is stuff that they just can't tell us. So anyways, we knew they exceeded 500 million RMB, but most importantly, what they did was generate 10.1 million in revenue for the company during the event, right? Which is a number that we didn't get last time. Doing some digging and stuff, the community kind of came up with like a $6 million number last year is kind of what everyone figured. But to note that in Q2 financial earnings call, Johnson said their total business with JD.com was approximately 60 to 70% of the 22 million they did in this aspect of their business, which puts it around like 60-70%. You're right around that 14 million range, right, overall. So I'm going to theorize here that the numbers that Johnson gave in that last Q2 of 2021 was around the business that they did with JD for the whole quarter. That's not just the 618 event. So what they're reporting in these news reports is just the 618 event. And another thing I want to go back and highlight again is on the singles day, right, to kind of narrow this down. And I think that 6 million number is probably fairly accurate, because they did say here that they're able to generate 7.8 million in revenue event, making their singles day debut just as successful as the 618 debut. So if they use that verbiage, then it needs to be the same or slightly better, which makes me think that, okay, yeah, they were probably somewhere in that $6 million range again for last year. So why did they do potentially twice as much transaction volume this last year than they did this year, but they made 10.1 million in revenue? So my idea behind this is probably a culmination of everything that the company's been doing behind the scenes to help improve their business and create better margins and value for all these transactions that they do, right? So they've done their UnionPay partnership with Wrong Bank Technology to implement payment processing and fund transfer features to the Business Hub. The Gold River, that was a big thing that actually happened last year's Q2 as well, was reemergence and integrating this, right? Because the biggest thing that we need to know about the Gold River platform is basically before this came back, right? Because they made Gold River back in 2016. Their supply chain was basically through this Asia Synergy, ASSC, which they were only 51% owned, but now that they're working all these transactions through Gold River, which is 100% owned by Tenet, now everything's going for their supply chain, like in these consumer goods, through ASST, right? So every time they do a transaction, now they're going to see more revenues from these transactions because they're 100% owned versus 51% owned, right? So that's what I'm looking at here. Also, the creation of virtual bank accounts to the Business Hub, and payment processing transactions to the China UnionPay network. So these are all things that can possibly increase the revenue off transaction volume, right? So you can have less transaction total business, and you can get higher revenue numbers, right? And then increases their margins, and they get the increased margins as well, right? Which they're still targeting around that 10% for the supply chain. So that's just something I wanted to point out to everybody that might be looking at this and a little bit confused about the numbers. Overall, I'm satisfied with the $10.1 million in revenues. I was really hoping to see a 2 here. That was like my super optimistic number. That would have been amazing. 10 million was kind of my number. As long as it's 10 million above, I'm not going to be disappointed. If it was less than 10 million, I probably would have been slightly disappointed at this, but this is good. I'm glad to see that they're able to generate more revenue off less transaction volume, which is good. And I look forward to seeing how they grow into Singles Day and Couples Day later in the year, or if they're going to do any more shopping events that we might not know about. The one thing I would like to see as well with this is they work primarily with JD.com retailer suppliers again. I would like to see them if they were working with Alibaba, because Alibaba still does a large amount of business during this event. So if they did do a large amount of revenue through them, or a large amount of business through them, would like to see them mentioned. Or if they didn't, I would like to see them, start to work with these guys more and more. It seems strange to me that they're focusing on just JD.com during this event, and then they're focusing more on Alibaba during Singles Day, right? Which I know it's their individual events, but all these retailers all participate in it. So they, there could definitely be possibly some more business opportunities that maybe they're not taking advantage of, but who knows the reason, right? Maybe it's just the size of the team and stuff they have right now, and they are still continuing to grow. So that's just one comment I want to make. So now let's look at this too, right? So it's been a pretty rough 3 months. They really declined after the last earnings. We were basically at a high about $5, and now we're sitting about 138. This news release didn't do much for the share price at all. No one really seemed to care about it. Everyone's still kind of waiting for these Q2 numbers to come out, as 10 million wasn't like a huge banger of a number. So let's say percentage wise, because of the shutdown, maybe we're looking at only 20 million now total for Q2, right? We could be 15 to 20 million total Q2 for supply chain revenues. And we've got, hopefully we're looking at around maybe 5 million for oil and gas, which would be pretty on par with what we've seen them do in Q1, I think, if I'm remembering correctly, right? It is really going to be up to, insurance kind of coming out with these big numbers, right? Which they said that we should see a lot of insurance revenues in this quarter, because they're able to deploy funds to complete the Heartbeat platform integration, and then we can get those revenues in. So let's say we're going to see that 10 to 15 million for Heartbeat, right? So right now we're kind of sitting in that 30 to 40 million in revenue range again for this Q2, which wouldn't be any unless we hit 40 million. A 30 million in revenue for Q2 this year is basically stagnant growth. We haven't seen any growth. So 40 million is kind of what they got to hit, and kind of what was like my minimum number for this quarter, to see 25% revenue growth year over year. And I think based off of these results and the shutdown in China, I'd be really surprised if they came out with anything above 40, like 45, 50 plus. I think is probably out of the realm of possibility, but you never know. I think we're just going to be again now in this waiting period. We got our 618 results. Now we're just waiting on TSX news, financing news, and the Q2. One thing I do want to say about the insurance revenues, right? It was a smart decision, I think, overall, looking back at last quarter or last year, about them delaying those revenues, because I think just the fact that if they had done that acquisition last year and we had gotten those revenues again, then it would have been nice for that year-end number to be a beat. However, that would have put them at a severe risk of capital, because to spend like 10 million or 11 million just to get like 10 million in revenues, that's only making them like a few million in actual profits for the company. Plus they need that 10 million to fund the North American side of the business. So if they go and they realize that, and then they try to bring the revenues back to Canada, then they have to pay taxes on that to fund North America. Plus then they're looking at the ticking time bomb of, okay, well, do we have enough cash to grow as aggressively as we want to get this Canadian business up, right? We probably wouldn't have seen 5 million in burn in Q1, because they probably would have been they would have kept the team a lot smaller, and we might not even be seeing a Canadian launch this year, right? So there's a lot of stuff that we don't get privy to, and we don't always get to know all the decisions behind it. But I think overall, I'm pretty happy the way things are going to pan out. I think insurance is going to pad this quarter's numbers a little bit, which is fine by me at this point, just due to the lockdowns in China and supply chain possibly coming in on par with what it was last year, right? So just something to mention there. So looking ahead, we've got Q3 as well. So Q3 is one I'm super excited about. We've got the clean tech coming online. They basically said last quarter earnings that we're going to see clean tech revenues. So seeing the reports on that basically gives them the 3 high margin businesses that are generating revenues for the company, and it also is a good indicator of them also delivering on their target of basically supply chain only being 50% of the overall business revenues for this year. So back in, I think it was Q4, they mentioned that in 2022, this year, they wanted to generate 50% of the revenues from their high margin businesses, right? And then the supply chain margins were going to improve, and that was going to be 50% of the business. So that's something that we need to be watching. And really, at this point, we're going to have to see a shift in Q3 numbers and Q4 numbers where they're actually doing greater than 50% of the total revenues in those 2 quarters to make up the difference, right? Because Q1 was still mostly supply chain, and Q2 is still going to be like, might be that 50-50 supply chain. So Q3 and Q4 is going to have to be like, supply chain is going to have to be less than 50% theoretically as well, right? So just something I've been thinking about, and as I continue to watch them come out with these quarters and the margins and stuff like that, right? So still really excited to see the numbers, still really excited to see the margin growth. Honestly, if they come out with a 30 million, but then they're like have great EBITDAs, maybe even net income, like that's a big beat for me, right? Even if they don't see the year-over-year revenue growth, there's still a couple metrics in there that's going to be like, it's super exciting. So really pumped for the end of August and seeing those. So last thing I want to talk about, and if you're just here to listen to Tenet, that's fine. Feel free to close the video. But I just wanted to have a look at a few things, right? So one is these ISM purchasing numbers, right? So the PMI, and then we have got core inflation and the CPI. So everyone's probably pretty aware at this point, CPI came over 9%, which is the highest in over 40 years, which is pretty nutty. 9.1% increase. But this is in contrast to core inflation, which the Federal Reserve bases all their rate hikes over. So core inflation actually went down for the 3rd straight month. So we're at this point where like the markets, and you probably heard this other places too, and the market didn't really have like a bad result to CPI being 9%, because the market overall feels like this probably is peak inflation. Just the fact that core inflation has been going down, and there's been like a drastic reduction in oil prices and other energy prices, like decreasing, and other commodities. The market probably feels like next month CPI is going to be down, and people aren't willing to sell off, because we're just at this point where we might start getting into lower inflation numbers again, and it might be a nice downward trend. Plus, the Federal Reserve, as long as they're basing their rate hikes off of these numbers and they're seeing a 3rd month of declines, they're probably going to stick to the 75 basis point increase versus the 100 basis point increase that some people might be thinking they're going to do. The Bank of Canada did do a 100 basis point increase, but just because the Bank of Canada did it doesn't mean the Federal Reserve is going to do it in the U.S. I think they're going to pay attention to these numbers, and I still think it's going to come in at 75. Because the other thing that they're might be looking at here too is the PMI, right? So PMI, since they started raising interest rates, has been steadily declining, and right now we're sitting right above, or right between 55 and 50. So basically, anything above 50 is basically good. If it's below 50, it's considered bad. So we're still in this nice zone here. I think they're just going to stick to their plan, and I think they're just going to do 75 basis points, and then again wait another month and then see what happens. So as far as coming out on the other side of this, I think again next month we're going to see probably core inflation decrease. Great, because core inflation excludes food and energy, but food and energy drive the cost of all these other things. So we're going to see probably CPI come down. We're probably going to see core inflation continue this nice steady decline, and we're probably going to see this come down again as well, right? And then of course, as soon as we start getting towards like this 50 mark, there's a really good chance that we're going to start to see jobless data start to substantially increase a bit more, because this basically means that manufacturers are going to be slower, so they're going to start cutting back on staff and all that stuff. So anyways, things are starting to look a little bit better. I think minority food agreement made between Russia and Ukraine for the safe export of foods from Ukraine. So this, I believe, is just waiting on Putin's sign off. So provided we get that could also be another nail in the coffin for inflation. So there are good things on the horizon. It seems pretty bad right now, and it's, especially when it comes to Tenet share price, it's easy to get discouraged, but the company's still growing. We've got these metrics that are starting to come down. We still aren't even anywhere near high interest rates. Like, interest rates are still pretty low overall. Like, the overnight rate is not at historical highs by any means. So once we get some economic balance that's happening, which we could start to get here into the fall, that's very possible we could get a rally, and then we get good Q2 numbers showing good EBITDAs, margin increases, possibly good net income, and then Q3 where while I'm not confident in Q2 showing a net income, I really think Q3 we're going to get great net income and EBITDA and margins out of the business, and I'm really excited to see those. So anyways, thanks for tuning in, everybody who listened all the way to the end. If you like this video, please like and subscribe, and it's great to be able to do a video on some news that came out from Tenet, because it's pretty quiet these days. So anyways, have yourselves a good weekend,